Inflation is real, and the Federal Reserve has taken action. The federal funds rate is expected to increase even more this year. But what does that mean for your portfolio? That's what I want to talk about today. I'm David Packer, financial advisor with Bridgerland Financial. Let's start with talking about selecting the right investments. When you're expecting rates to rise, the first thing you want to look at is your investment selection. Rising interest rates make it more expensive for both consumers and companies to borrow money. For this and other reasons, rising interest rates can hurt stock prices overall. However, there are certain industries that tend to perform better when rates rise. For example, you might want to consider financials, consumers discretionaries, and industrials. Next, interest rate hikes are a good reason to re-examine your personal debt. Refinancing your mortgage or other long-term debt at a lower fixed rate before a rate hike may help you keep the interest rate on your debt from outpacing the returns on your investments as rates rise. I had a client recently that refinanced his house when he only had about 10 years left on his mortgage. His big concern was having to start over at 30 years. Now, once I explained to him that he could remain at 10 years and get a much lower interest rate, he was on board. He went to a mortgage officer and was able to get a much lower interest rate and minimum payment, although he still paid his previous amount. Now, this will allow him to pay his mortgage off even faster than that 10 years had he left it there in the first place. Now, finally, consider bonds. They not only provide a relatively predictable stream of income, but they can also act as a portfolio stabilizer, helping to smooth out those returns during times of market volatility. A balanced fixed income portfolio with short, intermediate, and long-term bond maturities, known as bond laddering, can help position your fixed income portfolio as rising rates change. Also, remember, a good financial plan is designed with your long-term goals in mind. It likely already takes the possibility of rising interest rates into account. But if rising interest rates are on your mind, let's talk. I'm always just a phone call away. You can reach me at 435-535-1630, or you can visit our website at www.bridgetoretire.com. We look forward to hearing from you.